the US already has the lion's share of investment flows for that reason today. So all that's happening is it's justifying it. Whereas I would say there was a time where it was not really justified. Now, if you doubt it, you shouldn't be doubting it. They will remain strong, but they will have to engineer a weaker dollar in order to make sure their economy continues to flourish and balancing the trade deficits and the like with Europe, with China, and so on and so forth. They have to do that with a weaker dollar. So somehow they're going to have to engineer a weaker dollar, put more liquidity in the system, lower interest rates, da-di-da-di-da. They'll find a way.
Holy fuck, holy shit, it's a dinosaur! Jesus Christ, what the fuck? Welcome, ladies and gentlemen, to another issue of the Grey Market Talk. Hello, Nick.
Hello.
As a recent success of over 1,300 viewers for our program, I thought, well, if that is possible to repeat, I have to introduce ourselves in the best light again. So I'll start with me, because that's very easy and short. I used to be a market maker, was a partner at Bear Stearns, and I'm retired now, obviously, and love to talk with my good friend Nick about markets and, well, bounce around ideas, philosophy, everything that's going on. And who's Nick? Nick used to manage more money than Scrooge McDuck. The Americans know what to make out of that. He was the chief investment officer with, you always are trying to be modest to say, oh, it was only about 60 billion euros. So I love to exaggerate that. I've counted it.
Close to the truth.
It's more than you could buy 1 million Rolexes for 10,000, and that still wouldn't be enough money. So just take it from me, he managed so much money that I love to talk to him, because he made decisions and he obviously did not get fired. Had a good performance. Anyway, Nick, was that good enough for you?
That was, it'll do. Let's see if we go viral again this week.
Lovely. So we have three great topics here. We will start with politics in Europe, especially Germany, briefly. Then we'll go, obviously, what interests everybody, what happened in the United States, about Doge, about Elon, about Trump, his new cabinet. And then we'll go into one of the most beautiful charts as a setup with the line of doom, and let's talk about S&P and Bitcoin, what we can see here. And let's start with block one. Block one, politics. And we are not, to disappoint you, we're not mentioning any politicians in Europe or Germany, because Nick and I do not want to get arrested or be blackballed or anything. So we're staying with the economics. And there was one fantastic chart I stumbled across coming from the magazine Capital. And it showed Germany that only 15 million of our, it must be about 85 million citizens now, are net tax contributors in Germany. What does that actually mean? I divided a trillion, because that's the tax income we have, or the tax take we have in Germany. Half of that goes to the federal state and half of that goes to the municipals, and then they all spend it on things. That's roughly 12,000 euros per person. And the calculation here, but it's not clean, but it's very simple to say, okay, fine, that means 12,000 euros per head are being spent on services. So if you pay more than 12,000 euros in taxes, you are a net contributor in the easiest calculation, but it's never that easy. Let's just do the simple calculation and say you're a family of two, you both work, you have two children. How much in taxes are you paying, or how much services are being attributed to you? So 4 people, so that means 12,000 euros per person, 48,000 euros in services are hitting you already. Then you have 2 kids. 2 kids go to school, and let's say for easy calculations, it's also 10 grand per child per year in school fees. Even if the state is picking it up, it's not the state, it's the taxpayer who's picking it up. So we're already at 48, 58, 68, let's say 70,000 euros. This example family receives in services. Even if you pay 30, 35, 40,000 in taxes, you're a net receiver. You're not a net payer. So we have 15 million net payers defined. And I thought, who's getting screwed the most? It's young people at the beginning of their career, no kids, just working hard. Yes, you have to count these 12 grand of expenses that go towards you through public infrastructure, police, services, everything out there. But you're already paying the highest tax rate in Germany at 58,000 euros gross income. That's when you're already paying, well, the max tax rate. How is that sustainable, Nick?
I think people don't mind paying tax as long as they earn the money. And so there are two things. Basically, tax has got to be fair. So in other words, the majority of the people need to be paying it rather than the few. And it comes to the other chart you showed me, which was about how economic growth has moved along in Europe versus the US, or is it Germany versus the US? There's a huge
I'll
gap.
put that in right here while we're talking.
I
Yeah.
mean, there's a huge gap since the year, I think your chart was 2000. And what it effectively shows is that, the US has been growing like gangbusters and European growth has been very sluggish. Now, is that economic policy? Is that sort of the fact that Europeans don't have, the ability to just print money when there's trouble ahead, because they have to worry about their currencies, so they have to be very austere. They have to stick to a budget, whereas the US don't really have to stick to the budget because at the end of the day, they are the reserve currency, and nobody seems to be too stressed about that, at least not yet. So the US definitely has an advantage, and and also you have to say they probably had the better economic policies, using the advantage to their to the fullest extent. And where that's left, European growth is quite bad. And then you could say, well, is European growth also hemmed by this sort of unfairness in the tax system, or is it because of policies, other policies and regulation and red tape? Who knows? So it comes down to, if the economy is growing and if your incomes are growing and if your standard of living is growing, I don't think people worry too much. But when you look around the world and you are struggling today, and I think the economies of Europe are definitely struggling today versus other parts of the world, then I think that's a problem.
Well, we never recovered, according to this chart, after Corona. Yeah, we try to go back to the pre-Corona numbers, and you see America is producing beautiful growth. And then another chart I'm going to put in here, which was obviously our most important industry in Germany, the automotive industry. And what you can see here, the employment numbers in the automotive industry go down, down, down. There's a downward slope. Yeah? And guess which employment numbers go up, Nick?
Could be government, I would
Oh
say.
yeah, what coincidence, right? And what did that coincide with? With the change in government we had in Germany. Obviously, we don't want to mention any names. Just the arrest risk is too big here now
In
in
fact,
Germany. So, but we see that the public sector is attracting a lot of capable new employees, which brings us back to the original chart. Yeah? Everything that needs to be needs to be spent has to be produced first. By definition, public sectors cannot produce things, right? They produce administration and control functions, but they're not allocating assets in the most productive way.
yeah, I mean, exactly. I mean, this is the real question mark, and obviously you need more government workers, the more people you have in the economy. So if the population grows, whether it's through immigration or through birth rates, then you definitely need much more administration to take care of them. But the question is, are we productive in increasing our productivity and increasing the wealth of the economy? And my guess is that the charts you showed, that's almost certainly not the case. Whereas in the US, definitely they are.
Well, I think it's Elon Musk defined that nicely. He was talking in an interview I listened to a year, 2 year, 3 years ago. He was speaking about the function of capital allocators. And I thought that's very interesting because capital is one way. Yeah? We have 1 trillion in tax intakes, and that has to be allocated into parts of the industry for infrastructure, for whatever. Otherwise, it's just money lying around if you don't have guys who put it into efficient use, that this money contributes to growth. And we're not seeing that in Europe at the moment, not at all. Yeah? And the usual excuse is, Well, yeah, the war in Ukraine and our energy costs have gone through the roof, and everything is put down to this scenario. The war in Ukraine ruined everything, which gives one, we had this in the green room, the conversation. At the moment, there are noises. Mr. Scholz apparently spoke, our German chancellor spoke to President Putin a couple of days ago. And a lot of people did not like that. And I thought, why is there suddenly movement? And obviously, again, my conspiracy theory here, they do not want to give Trump the win when he gets into office. Because, yes, this war is going to end because it doesn't make sense to slaughter more and more of your young men when you're running out of pretty much everything. So wouldn't it be great to broker a peace deal before Trump gets into office, and then Biden on his way out can have the Peace Nobel Prize like Obama did for whatever reasons? What do you think about that?
Well, that's an interesting thought process. Bottom line is that the war does come to an end, and I think that's obviously going to be the best thing for everybody.
Opens up the next Pandora's box. We have about 1.5 million Ukrainian refugees in Germany, yeah? Which, as a good neighbor, that's what we did. The country was attacked by Russia. A lot of people had to make the decision to save their families, their wives, their children, and young men who did not want to serve in a stupid war. What's going to happen then? We don't have the tradition in Germany, at least since the Bundesrepublik, to actually say, okay, bye, thank you, see you again, please all leave us now. It's not going to happen, right? Most of them will stay in Germany. And we have seen these statistics, which were very interesting. Ukrainians who were distributed through all over Europe. We have this so-called citizens' money in Germany. Most of the Ukrainians who are in the Netherlands are working, hardworking people. The other people, I'm not saying that the Ukrainians don't want to work, but the incentive structure is so that, well, you have a lot of money if you don't work. Why put on the work? So I'm wondering whether then the next problem, because they can't blame it on Russia anymore or on energy prices, because what will happen when they do these peace negotiations, and that's my take on this whole thing, I might be completely wrong again, they'll probably give Putin more than he actually wants. Just two reasons. They can end the war, which is a good thing, and they can make life more difficult for Trump if they give Putin more now when he's in charge. So that doesn't solve any of the European problems we have right here, right? Because the Ukraine has to be rebuilt, so the money will still flow into the direction of Ukraine. And who's doing the business on the ground? The Americans. Not German companies, not French companies, not Spanish companies, not Italian companies. So would you want to be invested into the Eurozone at the moment, Nick?
That's a real big question. I mean, sort of the other point you brought up about Ukrainians when they came here, they get this Bürgergeld or they get some kind of support.
Yeah.
They're not very productive because they can't work, or at
Yeah.
least they probably weren't allowed to work under the rules.
No, they are. They are. They had a special
They are
provision.
now.
If
I
you
think
were
there
a
was,
refugee from Ukraine, you could come to Germany. You were looked after, and you were allowed immediately to work. Obviously, there's a language barrier. Yeah, it makes it difficult. But hey,
I understood that there was some difficulty getting these people to be allowed to work. But one thing I'm seeing is, so people who come and repair your fridge, people who come and repair, bits of your house as things go wrong. I'm seeing more and more Ukrainians come as part of the team, if you like, and therefore, you kind of get the feeling that they're now being integrated into the services, and that's a good thing because it's always been very, very difficult. There's always been a big complaint about, we don't have the people to do the work, and there's definitely a lot of work to be done. So it's good to see that, I must say.
yeah, I
That's
think
the
maybe
first thing.
maybe I didn't figure out this point straight enough. What I said is, if we are then rebuilding the Ukraine, but at the same time we have the productive citizens of Ukraine still in Germany, and
Yeah.
keep on paying them in Germany, we are in a worse position than we've been right now, and that will be. I wonder what the next excuse will be why we can't generate the growth in Germany, which we used to have in the past.
Yeah, there's little incentive for the Ukrainians who are here to go back there because there's nothing really to go back to,
Yeah,
at least now.
yeah.
And as you say, Ukraine has to be rebuilt. That's going to cost money. That's going to be very lucrative for companies who are over there. as you say, it's most likely going to be Americans who get a lot of the benefit of that.
So we have this situation. We hope that my theory is right. The war is going to end. The German economy is, well, not starting to break apart. We have serious problems. The automotive industry is suffering, and that brings us actually. Let's hope they get it right. And the question I'm always asking myself: if I'm a foreigner now and I have or a German company, good company, and I have a pool of investments, I want to allocate my capital. Where would I put it? Would I put it into the United States or would I put it into Germany?
Well, that is the big question. And obviously, before Trump, you had this administration in the US that I must say were, making some very questionable decisions, and you would argue the case. In fact, I did argue the case on a number of these videos that you are much better off out of the US and into other economies than in the US. And that was primarily due to the fact that I didn't really see a positive outlook for the economy in the US versus other countries. So I see Asia. Obviously, Europe has its own issues. Europe needs to solve its issues, but I would rather be in emerging and Asia rather than US. Since Trump, where you have this clean sweep for the Republicans, you have a Republican president and Republicans, in the two decision houses, as it were, then there's really a strong case to argue that America remains, the choice destination for capital. If it wasn't such an expensive equity market, but it definitely, you would say that, there's a strong case for, the economy to continue to run without recession. Things are going to happen over there. There are going to be plenty of opportunities to invest capital as they try this reshoring. They improve tax. So that's the other thing we sort of forget in this thing is if they do drop corporation tax, down to whatever it is, then the earnings power of the S&P suddenly goes up. So where even, I'd said the outlook for earnings is still very, very strong in the S&P, and it's very optimistic, but that's why the numbers are where they are, and that's why the market keeps going up. Well, if you drop the tax rate, then your earnings per share and the outlook for the the earnings forecast is going to stay high, and it's actually going to be probably even higher than where the analysts have them today. And if that were the case, then the market stops being expensive.
And
That's where the potential opportunities are.
Let's get officially now into the second part. Let's talk about the United States, because that's the most interesting market. We have seen this tremendous election victory of President Trump, which, at least if you followed the official channels, wasn't on the cards. Yeah, even I got tricked into, it's going to be a tight race and we don't know. Yeah. Well, I live in Germany. I believed the official news channels and thought it is a tight race. It was by no means a tight race. Yeah? He won the popular vote. He won all the swing states. And so here we are. We have a new president coming in, number 47. We had this video. Will he be number 47 or 48? Yeah? It doesn't matter whether they shoehorn Kamala Harris in to be the first black president, female president for a month or two. It's not going to happen anyway. I don't think that Biden will retreat just to make that possible. No. So Trump is here. And does he already has built a cabinet or a team, a support team here? Big elephant in the room. Obviously, I'm also putting the chart in. It shows Tesla versus all the other car manufacturers. And, Elon Musk, yeah. And you remember a couple of years ago, one of our colleagues told us you have to be invested in Doge coins. And I'm not mentioning any names. Thank you, Eve. uh, put us all in, and we had tremendous performance in there on this notion, yeah, that Elon was extremely bullish and wanted it to use to be able to pay for their cars. I don't know what went out of that. Anyway, it doesn't really matter. Doge, and now he will have a Department of Government
Government efficiency.
Efficiency. Isn't that awesome?
Absolutely.
Do you think he will actually be able, when realpolitik comes in January, to deliver? Because they were talking about, what did he want to save every year? A trillion or something?
Trillion, which is impossible, or trillion. The number seems quite impossible, but and when you look at some of the comments on Twitter, there's a lot of people doing the calculation saying, well, actually, if he's just going to go in and do what he did at Twitter, which is go and can a load of people, and obviously there's we talked about overemployment in the public sector versus in the auto industry. So in America also the public sector has grown very strongly, but probably it's grown again in proportion to the population growth that they've had. They've also had a lot of immigration and so on, so they have to have a lot of public sector to manage. So if Elon comes in and just says, look, we're going to can a load of people, get rid of that department, simplify the tax code, get rid of a load of people. It's a comment I made about a year ago when I talked about for people who complain in Germany that we don't have enough potential workers. As I said that time, there's a lot of bureaucratic departments you could eliminate and release them. And I think, the idea is that people have been focusing on, well, he could just let go of a number of people, they'll be useful for other tasks, and that will save the government a lot of money. But actually, when you do the numbers and you do your calculations, actually the saving is nowhere near what what you would need to have if you want to make a dent in the budget deficit. So the budget deficit is around almost 2 trillion a year. So how are you going to save 2 trillion by just canning a load of workers in your tax departments or at the Fed or wherever else you think that there's a surplus of workers? You probably only save about 300 million. So where's the other money coming from?
Oh, I have an idea.
And
You take the independence of the Fed away, and whoever you put in charge simply puts interest rates to, I don't know, 0.5%.
so that will save you 1 trillion.
Yeah, so you
Right.
have a trillion already.
So I actually think that, I fundamentally believe that America's going Japan. We'll talk about that later. But so, yeah, you could drop the interest rates. But I think, part of this Department of Government Efficiency is not about, excessive workers and inefficient operations. And Elon Musk is the most efficient operator out there. Yeah. But it's also about the price they pay for services. So there are a lot of companies who supply product, whether it's defense product, whether it's all sorts of other goods and services, to the US government, to the German government, to the French government, to the UK government. And when you deal with governments, they're not very efficient in terms of negotiating what price shall I pay.
Now
Because
you're making that up. Governments are very efficient. That's why we give them all their money, all
it's
our
just
money,
a
right?
rumor, I know. It's just a rumor. But imagine that if suddenly you had a resource which was very clearly defined, and you say, I I don't have the money. I need to negotiate now very hard with the supplier of this service. And the supplier of this service knows that they're going to pay. So they're not very good with the price. And I think what Elon Musk will do is actually sort of get closer to the real price from a number of these suppliers of services. So the suppliers of healthcare and all of these products, they have to rethink how much margin they're going to make on government contracts in the future, because my guess is that's where Elon is going to be turned. And Vivek, by the way, he's
Yeah.
also in that side, and he's also a strong businessman. I think that's where the money saving will be done greatly in this Doge department, as it were, and not just canning people and saying, well, that's it, you've saved 300, shut your department now because we don't need you. I think the department is needed, when it comes to negotiating the price of services. And frankly, that's a really good thing. Every economy needs kind of the experts to examine really just how much you're paying for services. I mean, we've had so many horror stories of the Brits paying this, that, and the other, and it's wasted money and canned project here and that railway network not running here. You know, it's a blueprint for how governments can be run in the future, instead of by bureaucrats, but also by businessmen. And I think that will save a great deal of money. It's a positive thing for the deficit, but it will take many years for it to happen. I mean, Elon is good, but I really wonder how long it will take before we start to see some true savings.
Let me ask you a question. I'm tend to agree with most of what you say, but it will take years. We have an example in Argentina with Milei. What was his famous line? Fuerte. He managed within a very short time to bring monthly inflation down to 2.5%, where it was at ridiculous levels before. I don't know the number, but it was something you were just at the level of runaway inflation. And he brought it back, and I don't know how many ministries he dissolved simply by doing it. Yes, the argument is always, oh yeah, but wealth distribution went down again. And yeah, because all these people who were fired in the departments do not find an infrastructure where they can produce productively in Argentina. However, in the United States, you have that, especially if you reduce taxes. So all these government workers could actually find better paying jobs in the private sector. And that would give you the ammunition to say, yeah, we're going to be brutal now. And well, Elon showed at Twitter how brutal he can be, right?
Yeah, as I say, I think, I hope you're right, sooner rather than later, but being realistic, it's not just about the people, it's about the contracts that are being negotiated. And it really wouldn't surprise me if these guys in the corporate world, America, have got 5-year contracts for supply of services at a certain price. And it will be very, very difficult to change the price or how the services look until these contracts expire. So, I really, it would be great if you could just take the Millet chainsaw to the whole sort of bureaucratic world and to all of those people who have been ripping off the government and the taxpayers for many years. But I really wonder how long that will take. I honestly don't know. We don't know. We are observers at a distance, but as I say, the point of the message is Doge belongs everywhere. It belongs in the UK. It belongs in Europe. We really, as taxpayers, we really want, forget about sort of asking the government to cut taxes. It's very difficult when the government already overpaid for services. Well, if the first thing you do is to get them to pay the right price for services, it's easier for them to cut taxes. And so I think, this type of department, they can take that as a lesson. I think that will be a really good thing that, to introduce that.
What influence might that have on you mentioned it, the healthcare sector? Because in America, the insurance for healthcare, they're not allowed at the moment to compete over state lines, very protective there. But from an initial response, I would simply say, okay, medication they always have the example of insulin in the United States, where you pay 3, 4, 5 times the prices you pay in Europe. And it's a generic product. There are no copyrights on it. And as a diabetic myself, I think, yeah, that's ridiculous. Why do you have these prices? Obviously, it's only a small example. But the United States has the best medications you could possibly find because they're allowed to make a lot of money with it. If you take that ability away, would you want to be invested in the healthcare sector in the United States if Elon has his way?
Well, now you're talking about Elon, but I'm now talking about Robert Kennedy Jr.,
Yeah.
who is now the health. He's being proposed as the health secretary. A few Republicans have said bad decision. The stock market has said, oh shit. So Lilly, all of these biotechs are down as a result of this thing. This has been signposted for months that he's coming in. So I don't really think that's to do with, the fact that he is there. But clearly he is somebody who is very, very focused. He was very focused on the vaccines. He's very focused on health. He ran part of his campaign was about getting the right health at the right price to to the population. So I think if he does get the nomination, then he will make some very, very big cuts to what these people are doing, and he will definitely put them under the scrutiny of is it really good for the American folk? Have you really studied this thing? Have you looked at the pros and the cons? So I think that's a really uncertain world for the investment climate for the likes of a Pfizer and all of these people. When you've got an uncertain kind of path, how do you do your cash flows? And you're going to have to build some large haircuts, and I think you're going to have to get these prices lower than where they have been.
Wouldn't be the game again, assuming that Marx wasn't complete wrong in everything, concentration, that you have the big conglomerates who are able to compete across state lines, have good products, and the smaller ones are being taken out. Because in the German press, I followed that quite, they said, ooh, with Robert Kennedy, he is an anti-vaxxer. So I read up on that and thought, a complete and utter lie. What he said about these modern experimental drugs, he said we should make vaccination available for everybody, but we can't enforce it by state that people take it. Yeah? Especially with the new untested vaccinations, you have to make them available, but you have to let people make the last decision whether they want to take it or not, which was one of the business models, obviously, of the big pharma conglomerates who are also the big spenders in the whole election process, to say, okay, wait a second, we have to come really with good product. We can't rely on the state anymore to shove it down people's throats is the wrong word, or make them get injected about
Absolutely.
stuff.
No, absolutely right. And I mean, you saw the example of that of the Canadian truckers. I mean, we don't need to
Yep.
make this sort of a European thing, but it happened over there. The Canadian trucker said, "Look, we're in a cab on our own. We really need to get vaccinated," and so on and so forth. And then they blocked the road, and then they sort of took the money, and then they did the same thing with the Russians. So, there was this sort of strong force of government for people to take these vaccinations, even if they didn't want them. And as you say, rightly say, that Robert Kennedy was all about giving people the choice, making sure the drugs are properly tested, and so on and so forth. And as a sort of person of a country, that's a good thing. And so for all of those people who are trying to fight now his nomination, you can see that these people are, heavily influenced by the lobby, the farmer lobby, as it were, and the supporters of Kennedy. Guess where they're coming from? They're not coming from the Republican Party, who are sort of heavily lobbied. They're coming from Bernie Sanders. Bernie Sanders is saying, what a great idea, because finally we're going to get, a better service to the consumers. And he's thinking about price, making it more affordable, and so on and so forth. Obviously, other people are thinking about other things, but this is a big topic right now, I must say, as to making sure that Kennedy's in. If he's in, the implications are going to be, as an investor, what does that mean? We really need to thoroughly analyze these companies. There'll be some opportunities, but it's nervousness, I must say.
Well,
And
it's also what you said earlier. Reducing healthcare costs, services is a big implication. Maybe you can achieve that, and I can achieve it in the right way. Brings me to the next guy who was Googled up. I knew him, Pete Hegseth, Secretary of Defense. Probably. Yeah? At the moment, we still have to talk about probably everything, even though the Republicans now hold the presidency, the Senate, and the Congress. So the nomination process will be actually quite easy in the United States. You don't have to have a big squabble. If everybody approves, then you have the guy you want in there. Pete Hegseth, who was he? The German press always called him was a Fox News anchor, which is true. And as I'm a Fox News fan, I love to watch this channel. Not because I'm a hardcore conservative, but hey, you have to watch the other side as well. I also watch CNN, but CNN got rather boring. Anyway, he has two how do you call it, Bronze Stars for bravery in combat, in battle. And the first thought I had, do you remember the time when Trump was President 45, and the chief of staff, I've forgotten his name, the first call he made was to the Chinese and said, yeah, we keep him under control, something down this line. With Pete Hegseth, you will not have that. You have somebody who actually believes in the, shall we call it, supremacy of American firepower, of American force worldwide. So again, going back into the budget, does that mean the Americans are going to spend more on military, raising the deficit, or keep it at the same level, squeeze it out of NATO, the Europeans, who are not paying their, how we call it always, the fair share when we talk about taxes, their fair share in defense? What implication will have that on the US economy, Nick?
Again, I really think that every country can kind of be more efficient. More efficient doesn't necessarily mean paying less. It just means more efficient. It means getting more bang for your buck, as it were. So I think one of the things this guy has said is woke is out now from the Army and the Navy and the Air Force. And God knows how much money they have spent on that. But that money that they have spent on that can be better used for the kind of things that he wants to achieve. So, he's shifting budget from one part of his department to another part of his department. And maybe that's just sort of net at the end of the day, the same. But, if he were to sort of tap on Trump's door and say we need to spend more on defense, then Trump's going to say, have we got the money for this thing? Or somebody's going to say, we don't have the money for this thing. Why? Because they've got a 2 trillion deficit. They're paying $1 trillion now in interest charges. They've got to pay the healthcare. They've got to do all of this. And the tax revenue is this. And it's less than what they need to pay. And so how do they manage this deficit over time? And that's really the big fundamental question. How does this thing go on in the US? And is it the bean counters, if you like, the accountants, who are going to be saying to the head of defense, sorry, mate, got no more money. You can use what you got, just be more efficient about what you're using. You can have what you've got, but it doesn't get any higher than that. And that may well be the case. So efficiency, I get the feeling, is the name of the game. And it comes back down to DOGE, and it comes back down to, and I really think that money is at a premium now. Governments need to treat it that way, to say, just because it came from the taxpayer doesn't mean, you can just spend it willy-nilly. And if you don't have enough, you can go and tax them a bit more, add another 2% on tobacco duty and petrol duty and all of this stuff. Tax and spend, which is what the Labour government is doing at the moment in the UK.
So who is set for running the Treasury?
That's a really good question, because it's somebody I know very well and somebody I respect very well, Howard Lutnick, of Cantor fame. He led Cantor, and I know this guy has built an amazing business. He is a crypto fan, a Bitcoin fan. I think he owns a couple of 100 million Bitcoins, definitely. And he would be good for Bitcoin. But a lot of people are saying that he's like a bull in a china shop, and we want this other guy, Scott, will come to me, who is Besnick, I think, who is one of Soros's team. He's a little bit more sort of, the intellectual in the room, strategy, macro, and all of this stuff. He would be, in my view, a much better advisor, economic advisor. He might even make take over the job of Jay Powell, because there's no way Jay Powell can stay. So it's not been decided, but I'm a fan of choosing Lutnick. I think he is a broker. And what do brokers do? He puts buyer and seller together. He finds a way for a win-win for both parties. And if your main negotiating counterpart is China, what is it that China believes? China believes in this win-win state. And I think Lutnick would be an absolutely sort of dream guy to have as Treasury Secretary. And Cantor's were one of the biggest bond brokers in the world. So that's the candidate. And the other candidate is getting a lot of support from different people. I think, if I'm not mistaken, Musk also favors Lutnick.
Just full disclosure, one of my brokers in the past used to be Cantos as well. So yeah,
as I say, I spent a lot of time with these people, and I know Lutnick, so good guy.
So it leaves us with the last question appointment, Tulsi Gabbard being in charge for the information services. What is that? The NSA, CIA, FBI, all of
Could
that.
well be.
With
Certainly.
Robert Kennedy being there and Trump having been almost assassinated twice. Will we all find out now who really killed Kennedy? And do we have aliens already somewhere in the United States? What do you think?
That's a really good question. No idea to any of that, but I think Trump, when you look at this team, it's a dream team. And it's very rare to sort of see all of these people as a team, but yet as individuals who are stars in their own right. And I have to say, you look at that and you look at investing in America, you say, "Ah, these guys are going to make it. These guys are going to continue to be a dominant force in the world, and they are not going to fail and become a weak country. They're going to stay strong. Their economy is going to stay strong. They've got the right people in the right places. And the positive thing is they are not focused on war. They're focused on economic strength and they're focused on defense. And that's it. And, as an outsider, that's kind of what you want.
Yeah, well, it's what we all want, right? But they tend not to do it in the past. And let me
This is a dream team.
that gives me a very nice segue in talking about obviously the deficit keeps popping up, keep popping up, keep popping up. Yeah, that is the big issue which we're going to see, which has been played by the markets. And while we were giving our seminar, we saw then the reactions of the market after Mr. Trump became 47 again, and there was euphoria in the market for exactly the reasons you just mentioned. Yes, deficit is one point.
Yep.
Deficit will be difficult. But the other point was, which you started the conversation with, is America or the US market seemed to be expensive before the elections in earnings power. And especially when you consider tax reductions and producing more stuff, is it still then expensive or not? The question is this euphoria we have seen? And I tend actually to sell into euphoria because I've seen that before. It never works out well. Reality soon catches up and then you see what's really happening. Anyway, we've seen the euphoria and the big reasons behind it are, on the one side, deficit. Is it going to be as bad as we all assume, or will corporate earnings completely annihilate this bad situation we are in? There's a chart I'm going to put in here as well. It was the earnings yield of the S&P versus the reverse yield of the 10-year. So there is
Equity
no
risk premium.
there is no risk premium at the moment for equities anymore. This would surely change if the things come to be as the new team hopes they will be, right?
Yeah, indeed. I mean, firstly, the equity risk premium is really important, but it's historically a bad predictor of future, like the next year's equity returns or the following year. It's a good longer term predictor, and therefore you kind of get the feeling that the returns, if you don't cash in there now, you're going to struggle to maintain that. But there is something new, and the new thing about the earnings we talked about is the tax reduction. If the corporate tax gets reduced, the earnings per share are going to increase, and if the earnings per share increase, then the forward-looking PE ratios aren't going to be as expensive as they are today, and they are ridiculously expensive today. And so, you could imagine that they become more normal. Normal doesn't mean cheap, but it means that it's just not as rocket expensive as it has been. So there is that sort of positive thing in the background. It doesn't mean that we won't get a sell-off in the near term, but it does also mean that there's probably another part of this rally that is still to come.
It's what everybody, or I heard the word now quite often, golden age. Is a golden age about to happen? And that is for me the best, well, pinpoint for what we have seen is euphoria in the market. I was always missing that. Yeah, the markets were overvalued. And obviously we listen to the numbers that come in. And the earnings point is, I think, one of the most crucial things. If we assume that the deficit is not going to spiral out, yeah, and that they will simply take down interest rates because that gives them a chance to reduce the costs the state has, at least in nominal terms. Yeah? They make their savings in there. At the same time, they reduce taxes and make production, because that we had this discussion over and over again. They always say there's only one way to fight inflation. It's a monetary phenomenon, and you only have to do it on this side. And I always say, have they forgotten all the textbooks? You can also fight inflation by producing more shit. If you're able to produce more, double the output, then inflation is not a topic. Then money supply is simply the grease for the wheels to move forward. That would be the positive scenario we have in here. At the moment, what I'm seeing, I'm with you, I don't want to call it, yeah, it is euphoria, but the positive notion, what Trump's going to be able to do, will probably carry us into January, February, and then people will see what the reality really does. Yeah, buy the rumor, sell the fact. If we look at the chart pattern, it's actually quite interesting. We've given away part of the gap after the election. We're testing now the all-time highs right now in the chart. And that brings me actually to part 3. I got this, that was my chart of the week. I distributed that internally as well. They called it the line of death. It goes back till 1929. And I believe, I'm not necessarily a big chart fan, but I believe in long trends. And if you see a really, really long trend, just pinpointing the highs we have seen, we have this now. We are at the moment, at least, very expensive in the market. The S&P is dangling right at this line of death. Everybody seems to have this sense of euphoria in here, but now we also have the situation, the numbers, especially I questioned, don't have to be tinkered again anymore. Yeah? Employment figures, they can show the real numbers now. We've already seen, what was that, retail sales, some weird number last week. Retail sales nominally went up better than expected, and core retail went down. So I had to look up again. What's core retail? Core retail is they eliminate energy prices and new vehicle purchases, because they are the most volatile part. So if you leave that in, retail sales looks good. The American consumer is still strong. If you take those out, it's negative. Yeah? So all these little things we were already discussing on this channel over and over again seem to be coming in, and there is nobody who needs the urge to make the election for Mrs. Harris more palatable. So Trump will now fight an uphill struggle against the real data, and he will not be able in this short time to turn it around. What's your take on that?
Yeah, we honestly, I agree with you. I must say, nobody really has a clue anymore about what's the real number. Where is the real unemployment? Where is the real growth? These numbers may well have been, for want of a better word, cooked, or another word, mistaken, miscalculated, coincidence. But irrespective, we don't know. But when we look at the earnings, and you say you can manipulate government stuff, corporates can obviously also manipulate. But we look at the free cash flows as well, and they look fairly solid in these companies that are sort of driving the S&P. So we will find out the truth over time. But I sense that the way that the things have been going since COVID, and there was a Macro Voices this weekend with Vincent Deloitte. I don't know if you managed to catch it.
I didn't listen to it yet. I was still stuck with Pippa Malmgren.
Right. The bottom line is, and it's a fascinating thought process, that there is an economy outside of the economy. So when we look at bank lending, we see bank lending is kind of tapped out, but where's the lending coming from now? It's coming from all of these private credit funds. It's coming from somewhere else. And when we look at, what are people doing when they're unemployed? In the old days, when you're unemployed, you go on a job queue and you sort of line up and you say, I'm looking for a job. Now, what people do, and you and I both know this, they become traders at home. They do YouTube videos. They earn their money in another way. So there is a side of the economy that is expanding, and the size of this economy is actually quite huge. And the third part of the argument is that the stock market's gone up so much that it's created an amount of wealth that, excuse me, that people can basically say, well, I can continue. The consumer is not tapped out because the wealth that's out there with the stock market is just so great. And how much has that gone up? It's gone up by 50 trillion, according to this guy. So when you take all of these things together, where's the recession? There is no recession. And there isn't a recession because the nature of the economy post-COVID has kind of morphed. And we're still looking at this thing over here, but there's something else over here that's actually growing. And it's growing much faster in America than it is obviously everywhere else. And so the fear of the consumer being tapped out is perhaps somewhat overdone. And on that basis, there is always a kind of a flaw at the moment to the economy as the economy morphs into this new type of world. And that, what does that mean? And then he went into the quads, right? Your quads, your sort of Goldilocks, reflation, stagflation, and deflation. And he basically says, well, on the basis that the government of the day, and this is the thing that I've been talking about nonstop with on the grey market talk, there will not be a recession. And it's the first time I've heard somebody effectively say, there will not be a recession. And what does that mean? He says, well, you take out that box in the corner. If you take out that box of deflation in the corner, what is the time when the treasuries do their best? They do their best when there's a recession. Now, if people suddenly realize that the role of treasuries in a portfolio, which is to balance a portfolio in a time of recession, and as I say, I've been saying it for a while. Vincent has basically come out and said exactly the same thing now. There will not be a recession. Well, what do I need the long end of the treasury bonds for in my portfolio if the only time they really outperform markets is when there's a deflation? There is no deflation anymore. There is no recession anymore. So that's why treasuries start to cheapen up. And this is, I think the point he was making to kind of argue the weakness in the treasury bond market, especially now. I mean, my view has been for a while that these things as a long-term investment make no sense. As a trading investment, they make wonderful sense. At 5%, you want to buy them. At 3.5%, you want to sell them. At 4%, you do nothing, right? And we're kind of in the middle of that range right now. But his view, and I share that view, that when you reduce the probability of a recession, you then reduce the necessity for these long-dated fixed income assets. Short-dated fixed income assets, what a wonderful thing. But long dated, well, I don't think so.
I have one point to destroy your case because I heard that there was a little tidbit that actually the government under Trump will go into the credit card fees or the interest rates being charged on credit cards and want to freeze that at a cap of
10%.
10%.
Also supported by the Democrats. What a wonderful thing. Basically no more rip-off of consumers.
Yeah, but what in Germany we have that already. Yeah, it's called Buche. You can't charge above a certain percentage on the
That's
credit
not
cards.
but
That's why we don't use credit in Germany. People use their credit cards as debit cards. In the United States, obviously, it's the complete opposite. Yeah? They finance their debt, they make the minimum down payments, and they keep on spending, 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 not because they are irresponsible, but they have to. Things have become so expensive through the recent inflation shock. If you take that away, the solution is not that there will be more defaults, it will be simply that there will be more credit made available, less credit made available to less people, which means purchasing power is being sucked out of the economy. Could that be the point that tips it over to get into the recession, which I was, very aware of, that markets will not move or economies will not move in a straight line. Eventually, we are going to see it. And sometimes it needs a tiny prick for the needle to pop the balloon. That could be one of those.
Okay, two points there. One is, why do people need credit in the first place? You're absolutely right that the economic growth where it has been, the huge stock market rally, the 1 trillion of interest rate that is paid on treasury, all this money goes to rich people. People
Yep.
would normally associate Democrats with, it's just equal and fair. The total redistribution of wealth in America under the current administration, previous administrations, has kind of gone the other way. It's rich people have definitely got richer. And so those people at the bottom end of the chain, after an accrued inflation rate of at least 25%, these people have their back against the wall. They are absolutely struggling. They don't have, factory to go and work in anymore because that's based somewhere in Asia. And you're right. So these people are truly harmed. The other reason, of course, people have buy on credit cards, because they say, well, I got my money in Nvidia at the moment. I'm not going to take it out of that. I might as well just sort of, load up the card and go and buy some stuff. So there is this sort of ease of access to cash when you've got cash allocated to equities or bonds, whatever it might well be. You might use your credit card more. I don't think that if you cap the interest rate, that banks will restrict the supply, because I think there are many organizations out there that will sort of offer this service where banks do not. So if the banks stay away, someone else is going to just step in.
Good
Because
point.
10% might be enough.
Good point. All right, then let's do what probably everybody is already waiting for. So you have two charts available for us. One is the S&P and one is the magic asset we all have, Bitcoin. I'm putting this chart in right here now. It shows you the asset classes, which are the biggest asset classes we have. And it's obviously, it's not perfect, but it shows gold. And now Bitcoin is one of the biggest asset classes as well, apart from the usual suspects, Microsoft, Nvidia,
Yeah,
Facebook.
I mean, we could also show gold briefly as well, but
Yep.
let's do that. I will now
That
take.
was actually while you're putting up the charts. The question is, dollar is going stronger and stronger and stronger and stronger. What's that all about, Nick?
Well, I think that is actually a very good question, because up until the Trump election, um, my view was that the dollar should continue to weaken. Why? Because, we expect the Americans to go Japanese, and effectively what that means for the Fed is to carry on printing or to start the printer again, and fill the gap where the foreign investors in US Treasuries are missing, and therefore that will weaken the currency. And there was a technical level at 100.60 in the DXY, which is the dollar index. It didn't break. So we recovered, and we're now on our way back towards, well, I think we're at 107, 108 right now, which is it's quite high for the dollar. And I think what they're building in is just simply, excuse me,
Bless
higher
you.
rate for the 10-year. So as the 10-year has been sort of gone from almost 360 in yield to now 440 or wherever we are, it's an extra 80 basis points. That has made the US assets certainly much more valuable. And obviously much more money has flowed in. The other thing, or will flow in. And the other thing that people are doing is actually pricing in Trump's policies. So if the policy is to say, well, we're going to reshore, that is what I'm saying that Japanese are going to be doing, is repatriation. They're basically taking capital which is overseas, and they're saying to the people in, to the corporates in Germany, corporates in Asia, you won't be tariffed if you produce in the US. And so effectively, people are saying, well, if that's the case, that's a dollar positive asset. That's a dollar positive result. And if the dollar continues to rally, that's not really what Trump wants, and it will kind of hide the benefit of tariffs. And so, at the end of the day, my guess is that the dollar will kind of find its peak around the 109, 110 on the dollar index, that is, before retreating low. Because I think, as we said earlier, great way to reduce costs is cut your short-term interest rates. And I think they will do that. They will have to do that. They will have to get the dollar down, and that should be part of. They need to equalize this sort of repatriation thing. They can't just sort of price themselves out of the world economy.
I'm a simple man. Could it be that simple? If I go back to basics and say, if I look into the history books, the market actually doesn't really care about where you set your interest rates, as long as you are the strongest economy in the world, then your currency will go stronger. We've seen it in Germany. We've seen it in the British Empire. We've seen it in the American Empire. Is the dollar actually confirming that Trump might be with his team onto something, that he'll get the last bastion of real capitalism going in the United States again? Therefore, people want to hold the currency of the strongest country in the world?
Well, the currency, remember, is a relative
Yep.
instrument. So the dollar is against the yen or the yuan or the euro or the pound. And when we look at these other economies today, and we look, firstly, let's look at it against China, one of the strongest economies in the world. That's struggling. So the dollar stays strong against China for the moment until China can actually sort of re-engineer its growth. Um, the dollar is strong against the yen. Exactly the same thing. The Japanese are trying to sort of get their economy out. They're trying to go from this negative interest rates to zero interest rates to positive interest rates. But they're still at or around zero in their interest rates. You know, the European economy, we don't need to say any more than the European economy. And the UK economy is, struggling. So on a relative basis, when you look at all of these economies around the world, you say, well, I kind of, if I were to put my bet on a clean sheet of paper, I'd probably say, the dollar has to be strong against all of these other economies. It doesn't mean that the dollar is going to stay strong against stuff like gold, like Bitcoin, like commodities, or anything else. But what it does say is that on a relative basis, it's going to get a bigger part of the allocation. But remember, it has already a big part of the allocation. So if you look at the MSCI World, which is a global index of equities, around 65 to 70% is effectively dollar based. So the US already has the lion's share of investment flows for that reason today. So all that's happening is it's justifying it. Whereas I would say there was a time where it was not really justified. Now, if you doubt it, you shouldn't be doubting it. They will remain strong, but they will have to engineer a weaker dollar in order to make sure their economy continues to flourish and balancing the trade deficits and the like with Europe, with China, and so on and so forth. They have to do that with a weaker dollar. So somehow they're going to have to engineer a weaker dollar, put more liquidity in the system, lower interest rates, da-di-da-di-da. They'll find a way.
Perfect. That will be the starting bit for our video, your monologue just there.
Oh, right. Okay, good. I always worry about what you're going to put at this front. Um, so we are. Yeah, you showed a chart on the S&P to me in the green room. This is basically where I am on the S&P, and of course there are a lot of people who will see this in a positive way. In that, from the no, there were sort of two key lows, November 22 and November 23. So you can see down here November 22 and November 23. And since that time, the market has effectively just gone up. And arguably, when a market goes up, as an Elliott Wave analyst, you don't sort of count 1, 2, 3, 4, 5. You basically say 1, 2, 1, 2, 1, 2, 1, 2, until you see some overlap on the downside. So we don't see yet some overlap on the downside. But as you put this chart up where you said, well, there's a long-term channel point coming in at that level, where we are today, then it is not implausible that this might be a significant high. So, I've labeled this thing to show effectively a significant high, where what I'm doing is saying, well, from November 22, we've had a wave one, a wave two, then we've had 5 waves we've had a subwave one and subwave two, subwave three, subwave four, now subwave five. So since November 22, I am labeling this thing as a one at November 22. So that was wave two. And now I'm counting a full 5 waves as subwave three here, intermediate wave three, you can see from November 22. And I'm saying I can count 5 to that point. Just because you can count 5, it doesn't mean it's the end. But let's just say, because of this trend line, because of expensiveness, because of uncertainty, because of this euphoria which took the market to this high. Let's just say that that is the high. What will happen next if it is? Well, what will happen next is likely the correction, and we would have to break through this 55-day EMA or 50-day EMA and head towards this 200-day EMA. And the target that I've put for such a correction will be possibly down to around 5,200, 5,300, maybe even lower. If it's a wave fours usually enter the price territory of the previous wave four of one lesser degree, which is sort of in this zone of 5.6 to 5.2. So that's my kind of idea. If we are peaking now, then I'd want to see very soon break of this 50-day EMA and heading lower. And once we break that, I think the next target will be this sort of 5,500.
So
It's
let me show off a bit because if I've learned something from you in the meantime, otherwise we'll cut it simply. We've accomplished a wave four, so the next would be a wave one, yeah, down. But we can also have the count as a wave three, which also would make the wave four being a down move, right?
So we are at the moment, to repeat, we are in intermediate wave three, which is that yellow three
Yeah.
up here. And after a three is a four. And a four is a down movement. And down movements are three waves. So whenever you see three waves, that's so you can see it here. Three waves are usually a great point where you'd say, okay, low risk reward, I buy the dip. And there have been many opportunities, three wave moves all the way down here, where you see, things correcting in three waves. And so wave four should be a three-wave movement. If it is wave four of such a degree, so I've called it, say, an intermediate degree, then it needs to finish within the wave. Well, it doesn't have to, but it's sort of usual that it finishes within the wave four of one lesser degree. So that would be the green wave four, which is this level here, 5,200 or 5,000, between 5.6 and 5,000. That area, that zone, and in three waves. So we have to see, and in order to see that, we need to see the first overlap. So here's an overlap point that we need to see. So we need to see a break of 5,691. So basically, what people could do, one way to trade this thing is to say, okay, I don't believe it's a high. I'm going to buy it very, very close to that sort of overlap point with a stop at that level. In case this is still a 1 2 1 2 1 2, and it continues up towards the 6,000 6,500. But I'm assuming, with all of the reasons you gave with your trend line and so on, that actually I think this is possibly a good time to take some money off the table. And if that's the case, then we will be heading lower. There are, as I say, I've got other counts which are more bullish, less negative than this thing. But I'm showing this thing today because I think it sort of fits nicely with that long-term trend line since 1929. Normally, what you want to see are sort of negative divergences. So you'd want to see things like, put call ratio really high. We want to see, the RSI showing you some negative divergence, but there's no negative divergence here. So we might see a correction. It may not be as deep as I'm talking about today. But it's sort of how I see the market, and I certainly I'm not long at this level, and I am playing a short myself. So that's how I see the S&P. As I say, there are alternatives. There are plenty of guys who just literally are doing 1 2 1 2 1 2 1 2, and then still waiting to do the threes and the fours and the fives and so on and so forth. So super bullish, generational investment opportunity because there has been no overlap, because we're not overlapping here, we haven't overlapped here or here. We just continue to go up. We make these corrections, but they never overlap the start of the previous wave. They're just going up. They're going up. If we go back, here we had again up. We never overlapped. We never overlap. We just continue to make these moves up. So I understand why people, from a technical perspective, only say, well, if we're not overlapping, then we're still bullish, aren't we? And I think that may well be, it's quite feasible. But there comes a time where you have to stick a 3 on. You have to basically say, okay, this is an end of a wave. As I say, I think it's quite feasible. 6,000 is a round number, kind of like it. Worth a go. And so far it's working. Whilst you're smoking.
Well, we have the S&P. Obviously, I'm following the count, which you taught me to follow, and under chance or risk-reward perspective, I'm with you on this one. Valuations we already discussed earlier.
Yeah, we don't have the tax
expensive or
cuts
not.
yet. We don't have anything to kind of justify, a new regime for a much, much stronger S&P. But I mean, to put it into perspective, if I'm counting this as a 3, technical level 3, you can see, follow this yellow line down, that there has to be that we will sort of finish with a 4, but it will have to go for a 5. And so 5 is much larger. So this is not the end of the US stock market as we know it. This just means that it's time for a bigger pause, time for a bigger correction in the same way that we've seen before. And if I'm not mistaken, also from the cycles analysis, we're already at a point of the peak of a 41-month cycle, which is a very strong cycle in the equity markets. You can follow that from the foundation of the study of cycles. 41 months, we're there or thereabouts at the peak. So this is one that you want to take note of. The larger cycle is still not due to come until 2026, but at least there is a cycle that's coming in sort of fairly now. Therefore, for all of those reasons, I stick a 3 on it.
Technical situation, 3 on it. Okay, got that. So brings us to the thing where you had a couple of magnificent calls. Oh, do you want to go do gold first?
Let's just quickly do gold. See, I've put a 1 on this thing. I've basically shown this is a completed wave, and a completed wave since, so what one is that? That is a 1 of this degree. How far down is it? So again, from the low, so in a similar vein, from the low of November 22, which was, or October, September 22, I'm saying that we've kind of completed a strong sequence. And for that reason, I'm kind of saying, okay, plausible that we get some kind of retracement here. Actually, I'm doing it from this low, from the low of November 22. I'm saying, okay, we've got 5 waves there. Maybe of a different order, maybe a 3 instead of a 1, doesn't matter. The point is it a significant high? And I'm claiming it's a significant high, and I'm giving some confidence because it sort of broke this low here of 2,600. So that's the first overlap. So on that basis, I'm looking for a correction somewhere down here, around 2,400 at least. That's somewhere like that, 2,425 in that zone. I'd be happy if it gets down there. Certainly, I'd be looking to dip a toe back into the market there. But gold looks like it's due for some kind of retracement further. As always, next point really to significant point where you really want to see things hold is just below 2,400.
Actually, Murat's shorts are coming in now.
Right. Okay. Well, Murat has the right view, I think, for now. And from a strategic perspective, and that's why I don't touch the strategic positions, gold for the long term, I think. Bitcoin, which is...
Oh, let me slip one in.
Yeah, go ahead.
For correction or not, is it possible that all the money which used to stream or flow into gold after Trump's election has now, at least on a tactical level, gone into Bitcoin because you made magnificent calls on Bitcoin, and that's a justification again. You have just have it on the screen. We are now at a level. Is that level the starting point for a super frenzy in Bitcoin, or are we due for a retracement?
So, no is the answer to the retracement thing. I don't think the rally is over. And so this is the chart that I've been using as the preferred count for a while. You remember in the summer, we basically said to everybody, don't buy Bitcoin now. Wait till August, September. So we basically, from somewhere here, we were basically telling people, don't buy it until August, September, which was really the low we saw August the 5th. It was turned out to be the significant low. I think that when we pinpointed the date using the cycles, I think I was sort of plus minus 3 or 4 days either way. I think I was August the 7th or something like this. I can't remember, or the 12th. But either way, I was looking for a low around here for different reasons. And the reason that primarily gave me confidence was the length of this purple box, which you can't barely see on the chart. Maybe I can just sort of quickly, make it a different color. It's probably, I've overdone it, but never mind. Irrespective, this box is the one I'm talking about. That length of box is the same as the length of box of this one down here. And, I like the symmetry. And so I was kind of looking for something ending around here. And then I said, well, on a symmetry basis, it's not really Elliott Wave, but it is sort of sometimes you see these things. We had a kind of once we found a significant low, I said, well, we kind of meandered a little bit in 2023 October for a while before we rallied. So I drew this box. I said, that's the meandering time. And I sort of tagged it at the end of this one. And I said, okay, let that be the meandering time. And that was, significant low actually at the end of this box. And that's when the rally starts. And so how I see the rally from that original significant low down here, I hope you can, I'm going to try and make the screen a little bit bigger. So to basically say, look, from this level here, I need to count 5, right? That's my job as an Elliott Wave analyst. So I count 1, 2, and then 1, 2, then 1, 2, 1, 2. And then we start having our first 3. And with a 3, I have to have a 4 and then a 5. That just finishes red wave 3, which joins with this wave 1 that I've got here. So after that red 3, I would need another 4, and then I need another 5. That gives me gold wave 3, which is part of this gold wave 1. After that wave 3, I need a wave 4 and a 5. That wave 5 becomes the end of pink wave 3, which is part of that first pink wave 1. So, and then after that 3, I need a 4 and then a 5. So you can see that in terms of the path that this thing is potentially likely to take, I need to finish off many kind of ups and downs and ups and downs and ups and downs before this thing is truly finished. So, ignore the numbers, for this point in the cycle, we're talking about between 100,000 and 150,000. That's a pretty wide number, but when you're trading 50,000 at the time, that's sort of quite far away and looked fairly impossible. Now looks it's sort of almost impossible that we don't go there, in my view. But we're about 92,000 or so today. So for that reason, that still remains my kind of preferred outlook for Bitcoin, but with one caveat. So that's Zoom, that's that. No, can you see a cycle on your screen, or am I sharing the same one? No, I'm not sharing it.
I'm still on the Bitcoin chart.
Right. Let me try and share something else, and then we can call it a day. This is
cycle spectrum.
cycles. So let's just sort of max it out. Let's put on log so we can see. And then we basically look at the most recent price action rather than the 200-day cycle. The 200-day cycle we can talk about in a minute, but let's just put a cycle top here. How many bars have I got? 1,300 bars, that's enough, right? So we got 188-day cycle here coming at the top. We have longer cycles still topping, so very close to, yeah. So, and if I look at a longer, much longer maximum chart of Bitcoin, and just basically make this fully, we have what's called these 5 waves up, 5 cycles up, and and 3 cycles down. This was a pattern, sort of put forward as a thesis by one of the key guys at the Foundation of Studies of Cycles, that's Lars von Tienen. And basically his hypothesis is that Bitcoin goes up in 5 cycles, goes down in 3 cycles, goes up in 5 cycles, goes down in 3 cycles. And the 5 cycles from the up from the last low, so he talks about it as a 200-day cycle. So we have the first 200-day cycle here, the second one here, the third one here, the fourth one here where we're at now, and the fifth one is here. So somewhere, and the reason I put this up is because of the Elliott Wave chart that I showed earlier, where effectively I said, look, we're coming up to sort of a target of, let's just say, between 100 and 150,000. And that timing of that sort of on my chart looks like somewhere around mid 2025, right? So somewhere around mid 2025 kind of fits in with the cycle here of, the fifth cycle of this sort of 5 up, 3 down cycle thing. So from a timing perspective, it looks like this thing, the first wave of this thing, is likely to go on. So I stop share now until at least the summer of next year, and that's basically what I'm effectively saying here. And I'm just putting a number 1 on this thing. But after that point, expect a much larger retracement before anything else that happens to Bitcoin. All of these forecasts from everybody, Michael Saylor of 2 point whatever it is million per Bitcoin, quite feasible, but we have to sort of trade these things in wave. And the first big correction point is likely to come somewhere in the mid of or thereabouts in 2025. And that's the kind of path that I see it. As I say, I've been, it's been so right so far, touch wood, but I'm still on this as my preferred count of the alternatives that I've got. And the path that I've got till the middle of next year before we see a much, much larger correction.
Very short term, do you think it's likely that we'll try to pinch the 100,000 before we see, a small correction coming, or have we already reached the territory here at 93,000 or 90,000?
Well, I mean, if I go to kind of a smaller scale, I'm not sure if my chart will allow me to do a smaller scale. I'm frightened to put in a 1 hour thing on this thing, but basically, if it allows me, then great. If not, then we have to sort of look for something else. So I'm kind of suggesting here that no, it definitely doesn't allow me, so that's a bit of a mess. I'm suggesting that we are in this sort of pattern of ups and downs, and if you can see my wave 4s here, there's a 4 in yellow, there's a 4 in red, there's a 4 in gold, there's a 4 in pink. I'm not showing those things lower than around 80,000. So basically, the way that I see it is that crypto will continue to make new highs and come back down into the 80s, then make higher highs and, come back down maybe into the 80s again and sort of work its way zigzag upwards, where 80 is now kind of the floor, where before, where we saw, Bitcoin was the 50s were the floor and the 60s were the floor. Now I think the 80s are the floor as we finally sort of make our way into this, what I've got it as a sort of final wave of the first wave I'm seeing this thing as sort of 80 as the floor, and then it gradually makes higher highs.
Thanks. So let's stop Bitcoin right here. Before we close up, I want to throw one thing in. Wednesday's NVIDIA Day.
Oh, of course.
Could that throw a spanner in the works? You always said, yeah, Bitcoin and Nasdaq eerily similar. If NVIDIA comes in disappointing, the whole party could be over, and we see the correction in the S&P. Or NVIDIA comes in with bumper numbers. We are calling off the recession. We're calling off everything, and we see the spiraling to the upside.
Well, on the video, we still don't have an answer yet from Supermicro Computers whether or not they're going to supply any accounts before the deadline. The deadline is Monday, Tuesday next week. So the deadline on Supermicro
Yeah.
is going to be before the NVIDIA results. So that's the first thing we have to sort of get over. NVIDIA results are NVIDIA results. I mean, they're always bumper. So people have been euphoric. Even good numbers may not when you're in a wave three or when you're in whatever it is as a top part of wave, it will correct. Bitcoin at the moment is trending on a different story. It is firstly the Howard Lutnick effect. He is a big. If he gets the Secretary of the Treasury, that's a big story. Gary Gensler going, that's a big story, especially for the altcoins. And there is still the story of the US becoming or basically putting 1 million Bitcoins in their reserves. So, that topic is at least 6 months old. The US have said that if Trump gets in, they want to put a bill forward. I think the bill is being discussed at the moment, that they will have 5% of the Bitcoin market, like they've got theoretically, or we're supposed to have 5% of the gold market in Fort Knox. Nobody's ever seen it apart from, James Bond in Goldfinger. But Bitcoin, they want to do the same. They want to strengthen the currency. Who knows? Maybe in the future they'll issue a 100-year treasury bond. Who's going to buy that? Well, maybe if I back it by gold, maybe if I back it by Bitcoin, maybe you do get some buyers for this thing. Maybe you kind of solve the problem of this debt financing until you kind of fix your economy or fix the tax system and fix your deficits. So they want to put that as a reserve. And people still question, why do we need it and stuff? There'll be a reason, as I say, sort of treasury-backed, Bitcoin-backed, gold-backed treasuries is a very good reason to sort of build up your reserves. And if they do that, then you've got the second country, so first one was El Salvador, having Bitcoin as reserves, and not a small country. So you may well see other countries starting to use Bitcoins as reserve. So this changes the whole nature of Bitcoin as a commodity, as a store of value, in the same way that gold is. And so it legitimizes this instrument, whatever you say about use cases and all of this stuff, use cases for gold. Yeah, there you go, use cases for gold. So use cases for Bitcoin, if people trust it, then it is something that you can potentially back a debt issuance with. And so if they take out 1 million supply, 800,000, because they already have 200,000 confiscated from different activities. The Germans used to have 50,000. They sold those deeply at 50,000 or something like this, 55,000. They might have to buy them back. So if the US do this, other countries may follow. And as I say, that legitimizes it. So NASDAQ falling or not NASDAQ falling, NVIDIA falling or not NVIDIA falling, I think for now, people are sort of still in that sort of phase of, we like this thing and we think it's getting more legitimacy. And when it gets more legitimacy, it becomes much more entrenched in people's portfolios. Therefore, the flow of funds as they come into markets now and a little bit over here will go into the world of Bitcoin, and Bitcoin will sort of find its way higher. So I am a Bitcoin bull. I've been sort of Bitcoin bull for a while now, as you know, and I still see the story as becoming more and more legitimate as a result of countries changing their mind about, is this a thing or is it just, just a tulip?
Well, I'll promise you one thing. I'll start getting invested in Bitcoin when I hear the news, because I heard that the other week, that Indian housewives, They own more gold than all central banks of the world together. And they have it in chains and necklaces around their neck. The moment I hear that they are settling for putting, I don't know, NFTs, Bitcoins around their necks, I'm in.
I heard that there is also Chinese are buying crypto now that Trump has been elected because they also see, again, this legitimacy thing, whether it's a real story or not a real story, we don't know. But it's kind of plausible in a way that, people want to have something in addition to gold, something electronic, something you don't have to lug around, something you don't have to sort of hide in your safe or whatever it is. You just have to remember 24 words and then you're done.
Fantastic. Nick, that was a great show. As always, I've learned a lot about Bitcoin again. I hope I'll get deeper into this topic, and probably the moment I start doing anything whatsoever, you can use me as an indicator
Jim
to
Cramer.
do whatever you please. To all our viewers, thank you for staying with us. We are well above an hour, I can
Sorry,
see.
that
I
was
hope it
me.
was worth your time. I enjoyed this. I hope Nick enjoyed it. And we hope to see you soon back again on this channel. Nick, any last words?
We want to beat 1,300 and whatever it was. So like, share, and subscribe.
Thank you very much. Bye bye. See you soon.
Bye-bye.